With the data, with the headlines, is Mike McKee. Good morning, Mike.
Good morning, John. Well, we've got a stronger than expected GDP number, 3% for the second quarter initial read. That's up from a 0.5% in the first quarter. 2.6% was what was forecast. Now, the interesting thing, of course, is we've got to break that down by category because we had the trade distortions in the first quarter. So let's look now at the GDP personal consumption number. Comes in a little weaker than anticipated. It's up by 1.4%. The forecast was for 1.5%. Gross domestic private investment, non-residential fixed, 1.9%. That's down from 10.3%. A lot of anecdotal reports that businesses were holding off on spending, and it looks like that indeed is what happened. Equipment spending fell from 23.7% gain to a 4.8% gain during the month. And intellectual property, software, etc., rises only a little bit, 6.4% from 6%. Looking at net exports, which should at least provided a big jump in the Atlanta Fed GDP now last week, or last reading. Exports were down 1.8%. Imports were down 30.3%. They had risen by 37.9% in the first quarter. So we know this is basically an import story and also an inventory story. Inventories down $185.5 billion. They were up $151.6 billion in the first quarter. So you've got inventories working against you. You've got trade working for you. And it looks like between the two, we really get a stronger than expected report because spending is not as strong as it was anticipated. Yeah. And the key number for us today is going to be real final sales to domestic purchasers. And right now, we're looking to see exactly what we got there at an annualized rate. 1.1%, down from 1.5%, 1.9% for domestic purchasers in the first quarter.